And a year from now, so around December, when this comes out, maybe on December 1st,
Yeah.
um, will Walmart or NVIDIA have had a better trailing 12 months in terms of where their stock price is?
What's up, guys? This is episode 26 of, wow, I almost said the All In podcast. Oh my God, I've been listening too much to their stuff. Beyond the Edge podcast, 26 episodes. And we're still going to be talking about the same kind of stuff. Not as much growth stock investing as we typically have in the past, but mind you, we do always end up talking about AI. Inevitably, all roads lead to AI. But we've got a bit of a diverse docket for you today. So we've got a full house. Declan and Peter, we were supposed to be here last week, but we had to reschedule. So we've all come back together now, and we're going to dig into some pretty cool topics. I mean, like I said, we're starting with AI, of course. So why don't we just jump right into it? These two guys are not going to agree on the first topic, and that's what makes this kind of fun. But we want to talk about an AI bubble, whether there is or isn't one. We could compare this to 1999. Some experts will say this does make sense, and others don't. So I want to kick it off. Peter, why don't you give us a hot take? You're obviously working really closely in the AI space. Just start us off. What do you think? Is there a bubble? Yes or no? And then what do you think is what are your views on this?
Yes, surprisingly, I might say
Okay.
it. We've entered some type of bubble territory just because of valuation and human nature. I'm obviously a huge advocate of the future of AI. We're very, very close to it. We're doing some cool things right now at our agency where we're being exposed to some of the first releases of agentic commerce. So I really believe in the future of it. I just think these valuations are high, and when you're getting that much valuation centralized across the Magnificent Seven, as it's eclipsed over 30% of value of the S&P, that worries me.
Declan, where's your view on this?
Yeah, well, I think this is kind of a common theme that I've kind of pushed for a while now. I do believe that ultimately, like post COVID-19, there was just a huge influx of capital overall, and this let or push towards like reckless investing. So whether that is AI or cryptocurrency or alternative investments, I think you see a lot of assets appreciating in price and not necessarily relative to their intrinsic value. Always a good measure is the Shiller PE, which right now stands at about 40, and that's the second highest it's ever been all time. The only other time it's been higher was during the dot-com bubble, and so that's just a good indication that takes in real prices relative to inflation, and I think it's a strong measure. But then again, you also just have to look at the fundamentals of each of these businesses. Yes, a lot of these AI companies are bringing in strong cash flows, but not relative to what they're valued at right now. Like, it's tough to justify NVIDIA's price, which is obviously the conversation that's everyone's having. But yeah, how about you, Kev?
Well, I recall making a video on the Schiller PE years ago, but why don't you give us a little rundown if somebody's listening and doesn't know what that is?
Yeah,
And
so
then,
essentially the Shiller PE is based on the average inflation adjusted earnings from the previous 10 years. So what it's essentially doing is just normalizing, and obviously the buying power of a dollar decreases over time. And so it can kind of be misrepresented if you don't factor this in. And this is just one of the strongest measures overall that kind of measures the relative price to earnings ratio of these, or of companies in general. And for comparison, the average over, I think it's like the past 100 years, is about 17. So that just kind of puts in perspective, it's more than double right now, the long-term average,
yeah.
and that really highlights it.
Well, that's a good segue then into my views here. So NVIDIA right now has somewhere around a 44 times price to earnings. So I remember back when I made my first tech investment, it was Apple way back in the day, and I think the PE was something around 20. And I just finished reading The Intelligent Investor by Ben Graham, and he, I think, was saying basically, anything above 15 times is nuts. So 20 at the time was crazy. Now seeing 44 times, give or take, it only makes sense if this kind of growth they're seeing continues. And I mean, I'm always bad at calling the top. I don't think I've ever got that right. The trend seems to go longer than I ever expect. So just because you're right or directionally right doesn't mean you're going to make money off it, because people will, stay irrational longer than you'll stay solvent. I think that's the famous quote. So I see 44 times, and I think, they better have such a great pipeline in store to maintain that. And I think the ultimate, short-term answer anyways is that it seems like they do have a pretty incredible pipeline in terms of the build out that the Mag 7 is going through is just insane. So I think for a few years, maybe it does make sense. But beyond that, I mean, you wonder when a company like NVIDIA is getting 75% margins, they are at over a $4 trillion company, which like a decade ago, we probably thought would never be possible. And they're trading at a valuation that's just crazy by any historical metric. Like you think at some point, someone's going to come in and eat their lunch, make their own chips. And all of these companies in the Mag 7, maybe not all of them, but a lot of them anyways, are looking at creating their own chips. So there has to be a point in time that they can't maintain their dominance. But it's just like, is that in 2 years? Is it in 10 years? I've heard some people say their kind of head start is in a 10-year range. I have no clue how to verify if that's right or not. So I just feel completely out of my depth. So if we're specifically talking about NVIDIA, I'd say, yeah, sure, it looks expensive, but is it probably going to stay expensive? I wouldn't be surprised at all until something fundamentally changes and someone else comes up with, a completely different chipset or way of doing this. I mean, I don't know. Like, do you guys have a strong view specifically on NVIDIA? Then maybe we can talk about some of the other Mag 7.
Yeah,
Peter?
I feel like it's going to be kind of the card that gets released in the collapse of the House of Cards because of what they're investing in, which is their own customers to fuel money back to them. I think when we look at how some of this AI boom kicked off, it was, with probably some smart money and some smart VCs funding smart ideas that then allowed some bad actors in the space, which, needed processing power, which needed cloud, which needed to give money to AWS or Google Cloud Console or Azure, that then needed to give money back to NVIDIA. I think that some of that VC money has now dried up, and I think some of the bad actors are going to be gone. And then rather than seeing the results of that today, NVIDIA has gone and invested a lot of money into people to give them money back.
Yeah. Do you want to explain that to people that are watching this? Because it is a weird circular revenue model. That's like a nice way to put it, I guess.
Yeah, for example, let's look at OpenAI. OpenAI is losing a lot of money, which a lot of startups do in the tech space. That makes sense. But they're losing it at an alarming rate. And to keep funding its growth, it needs processors. It needs things from NVIDIA for OpenAI to work while they continue to fund Kevin making videos of himself in a Middle Eastern jail.
Oh, you saw that?
Yeah, it was great. So that costs OpenAI quite a lot of money to do, and Kevin had fun, and I'm sure they're getting some learnings from it, but that isn't really sustainable, but they keep growing in terms of users, even though the unit economics aren't there yet. To fund that growth, they are actually getting an investment from NVIDIA of a commitment of $100 billion over a certain amount of time, which, although OpenAI is private, its valuation has ranged from 300 to 500 billion, with thoughts of a $1 trillion IPO.
Just insane.
So obviously that has some value to it, but they're giving that money to OpenAI to give it right back to NVIDIA.
Right.
So it's a real interesting accounting thing that's happening right now because, so they're writing that as an investment, right? Whatever that valuation is. Maybe some of it's in the form of debt. Maybe some of it is in equities and investments for that money to come right back to them. Yeah. Imagine the risk now if OpenAI has a down round or something like that, or if OpenAI all of a sudden doesn't need the capacity they needed in the beginning. What does that mean to NVIDIA? Then what is the ripple effect that then happens throughout the entire sector, which is now worth over 35% of the S&P? I'd be worried of what the downfall of that is, even from the ETF factors of everyone that just forcefully has to rebalance on the way out and keep selling and keep adjusting. And how fast could that happen?
Mm-hmm. Declan, what's your take?
Yeah, well, two things. I think this is both an institutional and investor-based behavior problem. So from the company especially NVIDIA. I think overall, you kind of said it, that their fundamentals are really strong and they are the best in the business, by no doubt. I think they're having a problem where they're raking in so much money that they don't know what to do with it in many instances. And investors are going to continue to put pressure on them to continue driving value and see growth. And that is forcing them to make weird investments. One, investing in their customers only for it to be recycled back in some way. But then two, this kind of goes back to, I don't know when it was, probably a year and a half ago, we were talking about, they're investing in SoundHound AI and they're making like $100 million investments for a $4 trillion company. Like, what is even the point of that other than, I don't know, just trying to park money in something and hoping it pays off? Like it seems like they're just in a lot of pressure that way. And obviously that's internally and not necessarily pressure like in a negative way, because I think they do just have so much money and they're floating on cloud nine right now that it's just kind of, what do we do with this thing? Now, the second part of that I was talking about is the investor behavior side of things. And again, this just kind of reinforces the whole bubble aspect, but there's such a short-sightedness with investors right now. And, you see the number of memes or even the conversations about if NVIDIA's earnings, they fail to beat them or they come in disappointing, how that's going to set off the market. Everybody right now is focused on a quarter by quarter basis, and that is very problematic because now you're not necessarily looking at the big picture and what the long-term durability of the investment is. And this doesn't just tie to NVIDIA, it really does tie to, again, obviously a lot of AI tech companies, but it really extends to most assets right now. And that short-sightedness is really going to affect a lot of people when things do turn for the worse, because again, you're just trying to react. And, you even see right now, like, I think it's Bill Ackman sold his entire stake in NVIDIA, and Michael Burry shorting NVIDIA or bought puts on the company. And these are just examples of people letting other people's influences dictate them, where now, if you do own NVIDIA shares, you're probably asking yourself very seriously, should I sell my stake? Should I get out while, the music's still playing and there's still chairs left on the floor, sort of thing? So I think that's where a lot of people, if they start to kind of trend in that way, it can easily turn. It's just, like you said, it's tough to predict when it really does happen. But, when that rug is pulled out from underneath you, you're going to be kind of caught with your hands tied behind your back, and a lot of people will land on their face. So that's.
Do you guys remember this thing that they used to call dividends?
Right?
Those?
Yeah.
Those are a trip, eh? World's largest company has never even said that word. Crazy.
Yeah. Maybe return cash to shareholders.
Maybe
that would make people stay for a while rather than just
then
imaginary
Apple's
values.
Is over in that end of the spectrum, doing the complete opposite. They're not investing in really any of this stuff, and they're just giving money back, maybe even too much. Honestly, you could argue Apple should follow some of these guys and put some money into this infrastructure, but there's got to be a balance.
The other concern for me, if it's the thing that could trigger the bubble popping, if it's not NVIDIA by investing in companies just to get revenue back, which is very concerning, it's probably OpenAI is really the other one where everyone's eyes are on, and what their liquidity event is, which I think Sam Altman maybe denied publicly, but I think has also said at the same time, going public, right? Mm-hmm. If I'm them, I was actually shocked that a lot of their revenue is still through a $20 a month subscriber, which I'm shocked by. So I didn't think that was going to get them to where they are today. I was shocked only about 15% of their revenue is APIs, people like me, companies like me using it and other companies powering it. And then agentic commerce is happening. They've partnered with Shopify. People are going to be able to check out of ChatGPT. Very important, obviously, Sora, all these other things. But then really the thing is ads. I think I haven't heard anything. I've had no early access. But if I'm running that company, if I'm running OpenAI, I am launching ads while the, going's good. As Declan said, the music's still playing. I am doing that for 2 quarters before I IPO. And then I say, look at this story. We've got all these advertisers, and I probably give agencies out there a whole bunch of credits to start it. And you can say, okay, all these people are buying our ads. Look at our user growth. Look at what this is going to look at. Look at what happened with Google. Look at what happened with Meta. Look at what happened with Microsoft ads. Tell that story. Probably doesn't hit like it's supposed to. They get their $1 trillion IPO valuation. They get liquidity for a quarter. A lot of people sell that have been holding for a while, and they don't meet any expectations, and that could really tank the bubble as well.
Yeah. What do you guys think? Do you think it's a good deal that, okay, well, Pete, I think you kind of said you probably don't, but in terms of like, okay, you're NVIDIA, you have tons of money, you could give it away, give it back as dividends, you think, I'd rather like invest in something. And there's OpenAI who doesn't have the money, but they have the demand, not necessarily like in terms of like customer driven demand, but they have like their own desire for chips in that sense. So you talk to them and they say, okay, we'd love to buy this off you. We just don't have the money. So you have an option like, okay, you could either, it could be debt, it could be equity. You mentioned it was a blend of both. I for some reason thought it was just equity. So that's how I'm thinking of it. And I don't know if I'm right or wrong, but you do debt if you're concerned about valuation, you do equity if you think it's going to go higher. So in one way or another, there's, Jensen and the NVIDIA team thinking that OpenAI has an ability to go higher in terms of revenue, subscriber growth. So it's like, does he know? Like, and these guys have to be so dialed in. So I'm just wondering, like, what's the thesis where they think this goes higher? And the first thing that came to my mind, and then I'm immediately going to take the other side, like I have a split personality here, but the first thing that came to my mind was Uber. Back when it was scaling, it was way cheaper than cabs, and they had always said, kind of hush hush, I guess, that any day they can start adding, $2 a ride, $3 a ride, user behavior will not change at all, then all of a sudden it's a profit machine. And that's exactly what happened. But there's like Uber and kind of Lyft, right? And then maybe a few other guys that, I don't know, are marginal. But so at first I thought, okay, you see a price to earnings, like a forward ratio of like whatever it was, 29, something like that. And you think like, okay, it's high, it's not crazy, but oh, hey, if this $20 subscription becomes $100, I bet you most people would keep paying it. And then I think about it from my point of view of what value do I get per month for like a $20, $30 subscription? I'm like, oh, hundreds easily. So would I pay up to a couple $100s a month? Yeah, for sure. And then I thought, okay, well then that would bring the revenue way higher instantly. But then I started thinking, well, hold on. It's not Uber versus Lyft. It's like, ChatGPT, and there's Gemini and Anthropic, and there's so many that I currently bounce between 2 or 3, and I don't really see a giant difference between them. So I wonder, can they just not charge a higher price because they know someone else will just happily eat their lunch? Like, Declan, you're nodding. I'd love you to chime in on that first, and then Pete, I want your take too. But what do you guys think in terms of their ability to lever up revenue in that same kind of way that Uber did?
Yeah, no, I don't think it's possible. It is very much commoditized, and ultimately, like a lot of these businesses are using the same technology. Once again, they get their like 90% of the hardware from one company, so it's not like they're finding a secret kind of loophole that ultimately provides better performance. And then on top of it, I can't remember which one of you, but there was an article shared in our chat about how end users using these products are not really getting a strong ROI. Right. And that's kind of, thank you, Pete. Yeah. So the conversation has always been like, well, certainly like if you're any of these companies, you're seeing performance enhancements, improving quality overall, whether it's imagery, video, even the conversations of these products, but it's still a fundamental problem that is going to always limit ROI. And that's because what these systems are, this machine learning based system, is that it does really good job of using things from the past, but it cannot handle uncertainty and it cannot navigate the future. And so that's why a lot of like major corporations, they'll try and implement chatbots, and they'll use these different generative AI products to kind of, again, provide some value to either their customers or their employees, but they're not letting it steer the ship for them. And that's always going to be the problem that, say, a company like AI or OpenAI faces, especially because they are always cash dependent and they rely on outsiders to provide that assets just to be able, or liquidity. That's the word I was looking for in that case. So yeah, I think it's just one of those things. They're going to have a real difficult time. And at some point, the money's going to dry up. You can't just keep raising your valuation when everybody else is playing the same game as you.
Pete, what's your take?
Yeah, I think I do disagree with Declan a little bit on the pricing sensitivity or elasticity. Because I would definitely pay more than $20 a month. I do. I use the $200 version a month. And I think some of these LLMs do have problems, but I think the future, we are in the infancy of agentic AI. I am rolling it out at my company, and I've sat with some of the senior people at my company, and our conversations are, it's going to be difficult to understand what triggers a hire versus what triggers just building you an agent. That is, we built an agent this week that did what was typically a 4-week human sprint to do for a client, that it can do it in 4 minutes.
Wow.
So, and for that to work, we need a $200 a month version of Anthropic and Claude.
And it was accurate? Like it nailed it to human status?
Yeah, it does. So it doesn't hallucinate because it's a local installment on your computer, and you're going to need local licenses on multiple computers. Which agents are, I think, why they're in their infancy, because if you had my agent just on my computer, if you were able to hack into my computer and get my agent, you would then have control over everything because it's connected through, it has API access to all my SaaS tools, which is a whole other subject that now that has really made me relook at the future of SaaS, where I would have been very bullish on like a CRM company like HubSpot, which I still am. Love it. Salesforce, we're HubSpot partners, but I look at a lot of SaaS companies. And a lot of people in my space now are like, why are we using SaaS tools when we can so easily build our own and get the results kind of how we want? Maybe this is tough to understand, but when you kind of look at a lot of SaaS tools out there, a SaaS tool is charging me to access my own data. Right. When I get it, and let's say, Kev, let's say you create a CRM. What is your CRM? It's blank until you get it. And then you put all your information in there, and then they're charging you a user license to get it.
Right.
So if I have an agent and then I don't have more employees and I don't need more users, that hurts the CRM business. Right. And then if you're telling me I just have to pay $200 a month to build an agent on my computer, but I don't have to pay for all those other subscriptions, well, then I think I will spend more $200 a month. Yeah. So that's it. Obviously, I think we're a little specialized. I sometimes forget, especially when I'm working with some of my clients, that they're nowhere near this level yet. Right. But I think it will trend that way for sure.
Just wonder then how, like, I couldn't believe it when you shared that stat that, I don't know if
2% ROI.
Yeah, like what? Yeah. Like, okay, yes, you're right. I made a video of me in a Dubai jail cell so that I could send it to my mom. It was hilarious, but it's
very realistic.
Very realistic. So hats off to them. I know that cost them a fortune. So thank you, Sora.
Thank you.
But in terms of my day-to-day, like the stuff that I use, though I definitely don't trust any of the AIs for hardcore data or like number crunching, because it just makes so many errors. It's ridiculous. Mm-hmm. But if I even just the amount of time I've saved sending emails by just turning on dictate, blabbing my high-level thoughts, copying and pasting in a previous email and be like, write me some response, that makes sense to this. And something that would take me, I don't know, I used to spend like a fair amount of time in emails, like making them like perfectly crafted. But if it was like a 30-minute email, it's now getting done in 3 minutes. Mm-hmm. I do like at least 3 or 4 of those, like that quality a day. I'm saving an enormous amount of time and money. And then, so it's just like when I hear that so few people are getting an ROI, I'm just like, what are you doing? Like, how? Like, what are these? Are you all just making videos of yourselves in like Dubai jail? Like, I don't know. It makes it blows my mind. Like, is that just because people don't understand what they could use it for? I don't know. What do you guys think? How is that stat even real? Blows my mind.
Yeah, well, I just think it's a scalability issue. I think on an individual basis, you can augment a lot of, say, tasks, but you are ultimately the one that is probably supervising and ensuring that the final output is approved and guaranteed and pushed to market, because you're not necessarily going to fully trust AI. And the thing is, I don't think the technology is there yet, but the users or companies that adopt the system that can operate fully autonomously or to a high capacity and with a higher level of accuracy are going to be the ones that have a competitive advantage. And it's going to be by orders of magnitude, because once you get started, you're already benefiting from the product of all the data that's being captured. That's not going anywhere. But then you've also got the head start. And if you look at the power of compounding, the longer time that you use and you grow at that higher rate, the higher that ultimate productivity is. And so that's where I just think right now, yes, it does, I'm not taking away from the fact that generative AI and machine learning does provide value. It's clearly demonstrated it, and it's been proving that for probably the past 15 years. And, another company that obviously is in the mix of this whole AI bubble thing is Palantir, but that's a prime example of an AI company that is using data in a very effective way, and it is built on machine learning things. The biggest thing is that you are just not going to be, no company right now is in a full trust state where they're going to let AI take the wheel and deliver that system. And so that's the thing, is even as a customer for a major company, is you're going to look at this thing and be like, well, sure, I want to add it, but I'm not going to, it's not going to be the key driver of productivity within my business. My human capital is still going to be that for me, because I trust humans to be able to, reason and make better judgments overall.
Yeah. That's going to flip. It has to flip, and it's probably going to flip sooner than people think. I certainly hope it does, because there's so much potential that I want to use it for. So as soon as you can get over that trust hurdle, it's going to be amazing.
Yeah.
Well, guys, we could talk about AI all day long. But let's say there is a bubble. Not saying that's our conclusion, but let's just say there is. And people are certainly some people anyways are looking to more of a risk off, or at least a risk management. Gold has been absolutely on fire, silver even more so. I want to talk a little bit about gold. Not to say I'm any kind of expert on the space, but I want to hear what you guys think. I mean, it's up over 50% year to date. Silver's up over 70% year to date. These are levels that I am stunned to see. And more important than just how expensive gold's become, it's the behavior is getting a little wacky, because as you know, gold doesn't have a yield. You don't get a dividend or an interest rate from gold. So generally when interest rates are high, which though we're in Canada, we see them as being low, in the US they are high. Typically gold would not be performing super well, because people would rather have money in assets that have some kind of return. Gold is still crushing it while interest rates are high. So it's this really weird dynamic. So do you guys have a strong view on what is happening in gold? Who looks more excited, wants to take it away? Neither of you. Great. Wow. Oh, Pete, there's a little smile. Okay, you take it away.
Yeah, it's been really interesting, because why is it going up in the same year as the S&P's gone up 25%, right? Almost exactly the same kind of in the trailing 6 months, which would definitely indicate bad times in the markets if gold was going up this high. I think there is some smart money that's hedging against what's going on with kind of the topic we just talked about, that when people flee from some more speculative things, people tend to go back into commodities and hard assets, and gold has always kind of been there. And now I think the types of ways that you can invest in it has also really opened up, whether that's ETFs, physical gold, or mining stocks, all seem to be up. I've been waiting for the silver rush forever. I think I started hearing about it when I was 20. People would be like, buy silver, and just nothing ever happened. So
everyone's got that one friend.
Yeah, I think what's the spot price of it right now?
I don't even know what the current price is. I don't have it on hand.
Check that out.
Yeah. 53 an ounce, up 76% year to date.
53. So yeah, I think when I heard about it, and I really do think it was almost 20 years ago, it was around 14. So, 1453 in that 20 years.
Doesn't sound that exciting yet.
No, not when you could have invested in literally anything else in that time. In 20 years, it would have been pretty hard to miss, as long as the
silver has way more usefulness too than gold, which also adds to the confusing nature.
Yeah. So I do think it's interesting. I think this was something me and Declan talked about in our group chat, that I was shockingly a little bit bullish on gold and some of the opportunities, especially with what I think is going to happen in the not too distant future.
Yeah, well, yeah, we'll dive into this. I think, first I will throw it a bone, because I did look at the 50-year compounded annual growth rate, and it is 10%. So that's better than I had originally expected. Now, I will probably take the Warren Buffett stance on this, and there's an old story that he told of you can essentially store all the gold in the world in a Olympic-sized swimming pool. And from that point, he talks about, well, what am I going to do with it from there? I can sit there and look at it. I can touch it, but it's not going to go create additional value for me. And I think that's kind of been a common occurrence towards my overall investment approach and philosophy is just, I want to buy into assets that are going to create value, be productive, and are also able, or one that someone is able to value. And so that's something that ultimately companies are valued by the amount of cash flow that they're going to produce into the future. And then you discount that back and you can get a pretty solid idea of what their intrinsic value is. It's the same thing with Bitcoin right now. I just don't know what the true value of gold is right now. Like, is it a good time to buy? Do you believe that it's going to still continue on a 10% compounded annual growth rate when it's currently at all-time highs? These are the things that it's just a lot more difficult to do. And I know that gold is very much a safe haven for a lot of people. And you think that, well, if fiat currency does run away with inflation or people lose trust in it, that governments and people have no choice but to go back to hard assets. But I don't see in today's economy that really ever probably happening like it did. And then there's also the question of, back in, I believe it was during the Great Depression, Franklin Delano Roosevelt actually confiscating all Americans' gold in the process. And so there's just elements of risk that I think are very different. And sure, again, it's on a historic run. So if you've had gold, like, you're probably feeling on top of the world. But it's just, I think companies and good companies are a lot more reliable and definitely a lot more productive than a bar of gold sitting in your, security chest or safe or whatever.
Well, I'm glad you said Bitcoin too, because it's like, okay, what is the core thesis of why people like gold? Well, it's finite, fungible. One unit is the same as the other, things like that. So you're like, okay, fine. Bitcoin is the same, except Bitcoin's actually more usable because you can actually transfer like globally. You can't I'm not going to send you a bar or a chunk of gold in Toronto and Calgary. Like, it makes no sense. The shipping would be ridiculous. Bitcoin actually solves for that. But then Bitcoin trades like a tech stock. So same thesis more or less, but they trade completely differently. So think about this. What is the end of world situation where people would want gold? Kind of like what you said, end of the world, you got a bathtub or a pool full of gold. What do you do with it? You chip off a little bit and buy a cow with it? Like, no, you get robbed. Plus you have to be able to actually, break gold down into usable coins. Like, so much of this starts to just get flimsy when you think about the real end of times, why people are saying this finite asset in the end of the world, why it would have some value. I think that's the time when it has the absolute least value. So I've struggled to always understand, to ever understand gold, other than, okay, fine, maybe you own a 1% of it through an ETF, and that's just the right thing to do for portfolio management. From a usability point of view, I've never understood it. I've never held it. I've had some gold stocks. It's different if a company is pulling it out of the ground and someone else is buying it. Okay, there's a cash flow play, but who's buying it and why? I mean, the answer to a lot of that has been the Chinese government trying to basically dump treasuries in favor of gold, and there's a million reasons why that makes sense, and we could have a whole other podcast on that, but I've just never understood it. Pete, you got views on that? You look like you had something there loaded up.
Yeah, no, I think you both bring up a lot of good points. I think when Declan's talking about the 50-year CAGR growth of it being 10%, I think a lot of that is of late. It really was kind of slow growth for a lot there. That's a great visualization of all the gold in the world fitting an Olympic swimming pool, because most of the gold that has value is still underground. They know it might be in mines. They know it's really expensive to get out. It has to hit a certain price for them to be worth getting it out. A lot of it's used in jewelry, which really in an end of world scenario might not help too much, having bling bling. But I do think you will, let's say in worst times ever, you would need a median of exchange. I could see the world going back to that. If person X has a cow and then person Y has, some protein powder, and you need both. How do you exchange the two? How do you value? You do need it kind of something of value. So I do think that there's something of interest there. I think it's a hedge. I think, like Kev said, as a percentage of your portfolio might not be the worst thing to ride out potentially rockier times. I do think something like, in, let's say, doomsday scenario, something like barrels of oil might be a lot more useful.
Yeah.
So I think that's what I was thinking of when you kind of said that part out loud. But it's interesting. I still think it'll be very interesting in the next kind of year or so of what's going to happen. As Kev said, we can't call the top of the market. That's very, very difficult to do. Even though we've had this huge bull run on the S&P, a lot of that was because Trump mentioned tariffs for a short amount of time, which scared a lot of people, and we've seen a bigger run. Because if we actually look at the peak of December 2024 to now, it's not as crazy of a run. You think we just had a real big dip in April, which has made a lot of things look good in the last 6 months. So it'll be interesting for sure. I think one thing that we didn't touch on, which in that AI bubble, is the capital investment in the actual infrastructure building in 2025 of AI infrastructure building and capital expenditure is more than half of the U.S. economy.
Really?
That's kind of worrisome to think about how much money has been spent and invested. I think just by a few of those companies, it's about $350 billion, which is, you're getting into, what the federal budget is.
Do you need any gold in those data centers by chance?
Yeah, right. That would be useful. So I think, circling back to gold, I look at it as a hedge. I don't think you should be putting like double digits of your portfolio into it. But if it was me, I would want a position.
Okay,
so do you own gold?
No, I don't own gold. I was gonna say, like, I just think, and again, this is my philosophy towards investing overall, but overall, I think a better hedge than something that, again, doesn't necessarily produce cash flow is just a very, very high quality business, something that has high profit margins, generates a lot of free cash flow, and has very little debt, something that could survive the next 10 years. And even during the worst of recessions, come out on top. I think that's something that, again, because what they are going to do that gold can't is they're going to further consolidate and strengthen their market share in whatever markets they operate in. And because, going back, we talked about bad actors in AI. Well, that's perfect. That's the perfect time for a company that is well positioned, somebody like a Meta, a Google, even an Apple, even though they are mature, to strengthen their position overall, because OpenAI is panicking and being like, what the hell is going on? Like, what are we going to do? Where are we going to get our money? And then obviously the other small actor. So I think that's where, it's beneficial. Sure, maybe the price of those stocks will probably swing more than gold would when a market crash happens, but that's the perfect opportunity to buy. And that's the time where you just increase your stake, and maybe that's where you do pivot your gold position into those assets, because again, you've retained more of your capital. But generally, I just think it's better to hold those really high quality businesses no matter what the storm, and then purchase more when it looks cheap. But again, I can't necessarily knock gold, because you look at the long-term chart, it definitely has gone up over time. And if it outperforms inflation, well, it's certainly better than many assets out there. But do I think it's better than the best companies in the world? Absolutely not. And that's especially true during a recession or a market crash.
Well, look at you, Mr. Buffett. Okay. So buy like a toilet paper manufacturer, because one day when this thing pops, we'll need a heck of a lot.
I think we're looking at building a position in Walmart, boys. That's what I'm looking at right now. If you actually
I read Sam Walton's audiobook on his life and come up story, and it was like shockingly good. I thought it would be the most boring book, but he just talks about how like a discount store was this, like, we talk about AI, like they talked about discount stores back in the day. They're like, you have all this stuff in one store and your margins are low and your volume is high. Like, whoa, this guy's insane. Yeah. It's such a good book. Sam Walton, was it Made in America? Mm-hmm. It'll make you want to buy some Walmart.
Yeah. Wow. I wonder, like, a hot take in 2026, who performs better, Walmart or NVIDIA?
That's a piping hot take. I like it. If I had to guess, just because might as well throw some on the record there, I'd say at least another year, if not 2 years of NVIDIA. Yeah, I just feel it because I want to tell you to sell it right now, which means it'll probably run for another couple of years.
Inverse Kevin.
Yeah. Oh God, no. Hey, don't loop me into the Kramer trade.
Declan, a year from now, so around December, when this comes out, maybe on December 1st, will Walmart or NVIDIA have had a better trailing 12 months in terms of where their stock price is?
Oh, good question. I think trailing 12 months, your case for Walmart is very strong. Would I rather buy Walmart or NVIDIA? I would still probably stick with NVIDIA over the long run.
Wow.
But yeah, no, 12 months, I could see their potential. You know, people is going to keep shopping at Walmart. So that's one given.
Pete, what's your take? And then let's wind this up.
I'm taking Walmart.
Taking Walmart. So wait, we have Walmart, NVIDIA. Wow. That's surprising. Okay.
Times are bad. Bad times are on the horizon if the tech guy's taking Walmart stock.
Yeah, what? Oh boy, okay. All right, sobering. Okay, guys. Well, that'll wind up episode 26, Beyond the Edge. Let's do this again soon, boys.
Right on.
Okay.